Hey everybody, it's Pete. Good morning. Welcome to today's episode of Stocks for Breakfast. It's Wednesday, June 24th, 2020. And we have a problem. We have a problem that I promised new traders and new members of the boot camp that was going to be a problem, which was learning how to hold good trades longer. That's right. The biggest problem we have now in the community is I got out too soon. And that's the next stage of development. So what we're going to focus on today is a couple of different methods of not getting in the good trades. We reserve that for people that are in the boot camp and all the different ways of doing that. But remember, we talked about what separates somebody from a chart reader to a tape reader is learning how to build that argument for a great idea. Now, the next step after you've found amazing ideas, your biggest problem is hanging on to them too soon, because what happens is if you haven't had consistency in your trading, if you found that your trading is kind of all over the place, and maybe you're not even losing money at this point, but you're definitely not making what you should, where you enter a trade and like, there it goes without you, or maybe like you just get barely stopped out and there it goes without you. You're kind of on the precipice. You're almost on the other side where you're a chart reader and you're losing money. You're a tape reader, you're building an argument, and you're really setting up great ideas. You definitely stopped losing money. You definitely, and losing money is in context. You've now gotten to the point where you're building great arguments, and most of your trades, provided that you're following them flawlessly, are really good ideas, and you're starting to see them follow through. And here's how you know you're finally getting to the other side. And tell me if you can relate to this. When you're on the first part where you're just chart reading, it always seems like every time you put a trade on like that, it moves against you. Like that, you're fighting it right away, and you're aggravated. Like you can't even leave to go get a cup of coffee in the kitchen because as soon as you put the trade on, you have to watch it. You're like, oh my God, it's moving against me. When you start to be a tape reader and you move from chart reader to tape reader and you start to learn how to build those arguments for great ideas, something magical happens. All of a sudden, trades don't start moving against you. Actually, you start to get a little bit of a head start on it where you can start to breathe a little bit. And that's where we'll get to today's interesting topic, which is learning how to hold those winners longer. And this really comes down to a kind of a deeper level of learning how to read the tape, which is the whole point, honestly, of the boot camp and being in the trading room with me all day, is I walk you through these scenarios all day. And then by the end of the day yesterday, on a day where the market was kind of tough, it was a little bit choppy. We ended up closing on the lows. We had some really nice gains yesterday, and specifically a stock that we stayed away from for a while, and another stock that how can I word this? I was avoiding calling out because I didn't think a lot of the traders could handle the volatility because it was having $40 swings intraday. And it kind of settled down to a point where we could manage risk again in a very safer way because it was very obvious. And obviously I use safe in air quotes because safe is relative to how much discipline you have. But anyway, I want to cover those trades. I want to cover a couple of different scenarios. One of them is a mindset, and the other one is a very specific way of doing it on the charts. But I just can't express this enough. If you didn't make money yesterday in a market that was really giving us some good opportunity, a very stock-specific market, by the way, meaning the bigger picture in the market, and specifically the SPY, the major ETFs, they're not really super obvious right now as they were a few weeks ago. And really the FOMC announcement and the COVID fluctuations in it's good, it's not good, it's good, it's not good, that's really kind of making it a little chaotic. So here's my point. My point is, if you're making money in this market, which is not a super easy market, there's good opportunity, but the overall market is not good. That means that, again, I keep talking about this, there's a gap between where you are now and where you want to be, because I'm sure you can look at any chart 7 o'clock at night and say, I don't understand, this stock went straight up today, how did I not make money in it? Or I don't understand, this stock went straight down today, why didn't I get out of it? That's another thing. We had a massively exciting coaching call on Monday night, which we have every Monday night as a part of the boot camp, really discussing what is that line in the sand before you put the trade on that determines whether or not it's still the same idea. Because think about it, you put on a trade and all of a sudden you love the idea and it starts moving in your favor a little bit, and all you're thinking about is your profit target. And how many times has a trade that you planned on holding for a week, a month, or whatever, whatever that time frame happens to be, and it starts to move against you, and now you're frozen. and here's the thought process, and I know this for a fact because I have these conversations in the trading floor every day. Well, I liked it, and I just want to give it a chance to come back. And all of a sudden, it just starts dripping, 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 dripping away from you, and it's not really moving away from you fast, but it's clearly moving away from you, and now you're stuck in a bad trade, and you really don't know what to do. You're just basically sitting there praying that the stock comes back, and you'll just take a break. You take a break even on the trade. Just get me back to even, and I'll get out. I swear I'll never make that bad trade again. You need to have a line in the sand that says, has the idea changed? And so in other words, if you got into the trade and this happened, and that happened, and that happened, and that happened, and you learn how to read the tape and you build a great argument, you need to know, but if that changes, what do? What is the next stage of the trade? Because there's the setting up of the trade, and then there's what do you do after the trade? So that part of trading, understanding has the trade changed, and what do you do about it, is what separates somebody who goes to the bank every month from somebody who keeps refunding their account every month. You don't want to be that person. You want your trading account to keep funding more opportunities. And a big part of doing that is recognizing, okay, I really love this stock. I really wanted to buy that stock. You bought the stock, it moves in your favor a little bit, and then it starts to come around and you're frozen. You're not looking in the opposite direction that says, okay, if this stock starts going the opposite way, what do I do? And the way we talk about it in great detail is we say, if this happens, then I'm doing this. If this happens, then I'm doing this. And there's different stages of that. It could just be your stock turns around, or it could be what happened yesterday for those of us that are day trading, where the market was relatively strong, not strong by any imagination, but we had the gap up, but we were just kind of hovering there the whole day. So from the net change, it was positive, but intraday it was just kind of neutral. But there were a lot of stocks taking off, but the market collapsed in the afternoon and some stocks followed it down. So that's a change. Even though your stock might not have pulled back yet, the market pulled back. Now you had to say, did that condition that made it a perfect trade change? And we did. We actually talked through a lot of, some people held some overnights on some smaller positions because they closed strong. Some people booked profits on trades that they got in the last 2 hours of the day. But we discussed the fact that it changed. And that's the key to getting paid. And again, I keep going back to this. It's the simplest, I think it's an analogy or a metaphor. I don't remember. I'm not a great English student. But it's like driving. You know, you have to understand, like you're driving 80 or whatever, however you like to drive, you're driving 70, and then all of a sudden traffic comes in. The conditions changed. You need to recognize that when traffic comes in and now you're in stop and go traffic, that's a pause on the charts. You have to determine, is this a change of direction, or are we just slowing down for continuation? And ironically, I hope you took advantage of what I mentioned in DraftKings on Monday morning, where that was the stock of the day, where I looked at it and I said, we're starting to see money change from the smart hands to the uninformed hands, and the stock has been down big for 2 days now. And Monday specifically, it was a $6 trading range from high to low. We'll take a very quick look at that. I don't want to turn that into what we're talking about here. But again, this is a part of us working together in the community. Is I walk you through all of this and how to actually make money doing it. So if you're not in the boot camp, the investment's so tiny. I really encourage you to click through, learn, see how other traders are doing, because that's the real proof. It's one thing for me to say it, but if you click through and see how they're doing, that kind of gives you some confidence that you can do it as well. So we're going to hop over to the charts. The two things that I want to talk about are, first of all, reading the tape and holding trades longer. You absolutely, first and foremost, need to know how long you plan on holding the trade. You can absolutely day trade and swing trade. 100% you can do that. However, you need to know which of those trades you plan on carrying overnight and longer before you put the trade on, because there's certain situations, certain conditions that make it a great trade that you would want to hold it overnight, versus you traded a stock that had good conditions today versus that's it. It only had 1 day. So you hear me often talking about, if you're a regular subscriber to the channel, where I talk about how strong is the argument. How long has smart money been buying this stock, or how long has smart money been selling the stock? Because that's the commitment. If smart money is buying the stock and it's 1 day, you see this one giant green candle, that's 1 day. of commitment, 1 day of smart money buying versus what if you have 2 days? What if you have 2 weeks? What if you have 2 months? The higher you start to go out to where smart money was committing real money dollars to create higher highs and higher lows over a longer period of time, that's when you start to have a little bit more conviction in your idea. And those are the ideas that you can hold on to a little bit longer, because it will take a while for the smart money to unwind those positions. So you start to see how we put the pieces together, and you really, really make that leap from tape reader to now you feel like a trader. I received this question the other day: when do you know you're a trader? And it really comes down to when you start getting paid. And there's really no other way to put it. If you're trading for even 6 months or more and you're still not getting paid, you're still kind of stuck in limbo, and that little knowledge gap is what you're missing. So that's the first one, is knowing how holding winning trades longer is absolutely knowing how long you plan on holding the trade in the first place, because you're not going to get shaken out by those little wiggles and jiggles and one candle that moves against you and that kind of stuff, or one bad print that looks like, oh my gosh, it's crashing. You're not going to get shaken out that, because you have confidence in the bigger picture. And if you've read Reminiscences of a Stock Operator, he talks about that often, where natural pauses in a market are part of advances. So you need to be able to determine, is it an advance with a pause that you plan to see continuation, or is it an advance where you're starting to see heavier volume churning where you would expect a turnaround, very much like we're seeing in DraftKings right now. And I'm going to go to that chart right now. So we're going to pull that up. We're going to go to what, in my opinion, is by far the easiest way, because we're getting a ton of questions about how to hold those winning trades longer. Is it a trailing stop? Is it a percentage of trailing stop? Do you scale out of positions? And the answer, quite frankly, is you could use any of those depending on understanding what's on the road. Are you doing 90, or are you doing stop and go back and forth? And what does that mean? That's the beauty of being in the room with me every day, is I walk you through how to determine that now. I walk you through, no, the road's wide open right now, and here's because of X, Y, and Z. I walk you through, right now it looks like the market leaders are pulling back despite the fact that the market's still going up. So they're selling stock, and the ETF, the SPY, or the Dow, those kind of things just haven't turned around yet. So these little things that make a difference make a huge difference over the month and actually how much you get paid. So again, if you're not getting paid, or you're getting paid like that, and you want to get paid, this amount, you're missing something. And I'm encouraging you, and I feel like it's my responsibility, because I've been through where you are now. I want to show you that. I'm encouraging you to take the next step and join me for 30 days. You actually do see my trades, and I tell you exactly what I do. So let's go over to the charts. I'm going to show you what I saw on DraftKings, just in case you didn't see it in Monday's video, and it's on tape, so you can go back and see it. I called it before it happened. And then we're going to take a look at the very structured way of holding your winning trades longer, and actually re-entering those positions using the same signal that gets you out of the position. So we're going to go over to the screen. First, I'm going to take a look at Penn, because this was a stock. We're going to take a look at Penn, and we're going to take a look at a couple of other ones that had some good days yesterday. But you can see Penn actually exploded yesterday and had a good move. So here's the key that I want to walk you through. It's a 10 and a 20 period simple moving average on my trading time frame. So the exit strategy for a winning trade is when price crosses below the 20, and then when the moving average crosses below the 20. So in this case here, all the way over here is the first time that price closed below this 20 period moving average. So you're holding it this entire time, looking for it to punch through and move higher. So you're not getting shaken out by all these little moves, something like that kind of thing. It's probably not the greatest example, because it was strong. It was super strong in the morning, and it was easy money, quite honestly. Maybe it closed below here. You could have possibly got out there, or maybe here, basically a little bit later. But here, where the moving average crossed over as well. So you got the first piece of the exit here, when it crossed below the 20, which is the faster, right? Because price action is moving faster than this moving average. Then you're giving it another chance, and the moving average crosses over about 20 minutes later. So the first exit, if you have more, a decent amount of shares, and it could be 200 shares. So first exit would be there, because price action crossed below the 20. So the trend in this instance on your entry time frame is the 20, and then over here is where you end up taking the second piece, because the moving average crosses the other moving average. Now the question comes in, can you use this same thing on the other side? And the answer is 100%. So if you, assuming you still like the stock as a buy, that's a big thing. Remember, we just talked about whether or not the idea changed. Over here, where it crosses back above, the price crosses back above the 20-period moving average. That would be entry number one. And then over here, about 20 minutes later, where the moving average catches up and crosses, would be entry number two. And then you participate in this nice $1 move at the end of the day. Now, what's super interesting here, and we talked about this in real time in the community yesterday, for those of you that are day trading, we actually got a nice $1 spike here. And there was, at that point, the market failed at a very important tape reading number that we watched and started to head lower. We said, watch this. If this fails, then we expect this to happen. So again, understanding in real time while I'm coaching you through this, at this point, the market started to get weak and started to come in a little bit harder. And that was the situation, despite the fact that the stock at that moment made new highs. The conditions changed. We went from open road to what's going on here, and it was an easier trade to book some profits on there. So again, that's the value of having community. And one thing I really love, and I'm very proud of, is that everybody in the community is really starting to embrace that there's enough money for everybody, and we're all helping each other. So that to me, that's really exciting, and I'm proud of that. So also everybody in the room, I want to thank you for that, because that means a lot to me. So anyway, the next one we'll take a look at, we'll look at Microsoft, which is just a little bit different scenario, but I think this is a better example because we actually gapped up, traded through, and it doesn't matter where you got long. We're not going to get into entries today, but if we follow what we just talked about, this right here would have been an exit of half of your piece. And I'm just saying if you got long, let's not talk about where. It's really more of an example for understanding how to use what I'm showing you right now. This right here, price closed on the opposite side of the entry time frame trend, but the moving average never did. So you're actually holding it through all of these potential exits because the moving average never crosses below here. Then here's the interesting thing. Remember before we just talked about it crossed down, you got out, and then it went back up about 2 hours later to re-enter? Well, you would have got stopped out here on half of your position, but then put that share right back on because the trade reevaluated itself and the road opened up again, and you would have had a really, really clean move to the upside the entire time. Now, again, this is in the afternoon where the circumstances changed a little bit. If you held it and were looking to hold the entire day, this would have been your first exit because price crossed below. And then about 20 minutes later, the second piece. Actually, I want to show you that the trade in DKNG, just so you can get a feel for that as well. These are the last 2 days in DKNG. So you can see when we made the call on Monday, here's Monday's price action, here's Tuesday's price action. We'll see what happens today, but it's a specific scenario that I look for all the time, which is accumulation, which causes rallies, which is smart money buying when it's quiet. Then there's distribution, which is when smart money's selling to those who don't understand how to read the tape, which thankfully we do, and we're saving money as well as making money, like saving money by getting out of positions or not putting on trades, and making money when we see the conditions really line up for incredible, incredible trades to the upside. And again, some of those trades we can hold for weeks or months. So it's not only day trading. We're just using day trading examples because you kind of get a hyper, you get an accelerated learning curve because there's more examples. So if you're holding trades for months, these principles still apply. The boot camp would absolutely still be beneficial because you're going to learn. And what we do talk about a lot of swing trades. The conditions for swing trading have changed dramatically again over the last 10 days, which is also something to learn because it's a smart concept to understand. When the conditions changed and that easy money was made when everything was exploding 2 weeks ago, that's not here right now. So your trade expectation should have changed, which means that you're going to be a little less inclined to hold size or bigger positions overnight. You might have 1,000 shares of 5 different stocks or 100 shares. It doesn't make a difference. 2 weeks ago, but now that the conditions have changed and the market's not really perfect, you would reduce the amount that you're holding overnight and maybe even reduce overnights in general because a lot of these stocks just aren't following through. And we also saw some really big profit taking in some bigger stocks yesterday that have been really exploding, stocks like SE, SQ, and a few stocks like that. So a lot unpacked today, but once we get going with some coffee, we actually have a good call. So thank you so much for attending today's episode of Stocks for Breakfast. I really wanted to thank everybody who's in the boot camp with us right now. and staying with us for the entire year. It just means the world to me that you trust me to help you make money, and we're actually seeing it, which really gets me excited too. So have a great day, everybody. Make some money today. It looks like the futures are trading lower today, so we'll have a different game plan for that kind of an opening. If you find these videos helpful, absolutely click down, subscribe, and if you want to learn more about the bootcamp, click down into the description, and you'll get a link there to see how everybody else is doing. Have a great day, everybody, and be safe.